All right. Hi, everyone. Thank you for joining. And again, happy Independence Days to all the Americans that are celebrating. We are now going to start the weekly trading room. Just a quick market overview over the major currency pairs and some crosses. Of course, if you have any questions, type them in during the session, and I will try to reply once I see them. This is, of course, this webinar is for educational purposes only. I'm not giving any trading signals or any advice. So, of course, any question you may have or any, anything I say here is for educational purposes only. Don't take it as a trading signal to go in or to exit any trade. Okay. Leanne here is saying that no entiendo nada. Que lo dices de lo que. Okay, so yeah, you're writing in Spanish. Well, I understand Spanish, but unfortunately, I can't really give the entire webinar in Spanish. But yeah, I hope the lenguaje universal of the charts. And I hope you'll understand at least everything I'm saying about the charts. Let's start with the euro dollar. And we'll look at the weekly chart. Looks like the euro dollar is, on the verge of completing a double top here, but I'm not sure it will eventually be completed. Pay attention to the lower demand zone here that the pair almost touched and bounced from, rebounded from. Basically, we have, you can see it on the monthly chart, a very big supply zone on the monthly chart. And the euro dollar came or arrived at this supply zone from this demand zone at the bottom. So it's right in between two monthly zones, the demand zone at the bottom and the supply zone at the end, at the top. It formed an engulfing bearish candle last month in June. So that's a bearish sign. It's basically price action coming out of the supply zone, the monthly supply zone, with this bearish engulfing candle and a potential double top. But as long as this bottom from March remains intact, as long as the price doesn't form a lower low, we're still in an uptrend. Okay, we have a lower high, but we don't have a lower low yet. We still have rising highs. So if the low from March is broken and a new low is formed, then the double top is completed, and then we have a confirmation from the double top, in which case we may have a target of around, I don't know, 500 or 550 pips, which takes us all the way to this area here, over here. This is the target if or should the double top, completes or gets confirmation, gets confirmed. But again, we have first this demand zone to break, and we need to see if this pattern is complete. Otherwise, we may see the euro dollar moving sideways in this triangle form. This is another option for the euro dollar to move sideways in a triangle, which may be a continuation pattern for this move up. And again, it's coming from demand zone after, compressing into the demand zone. So it could go higher. But again, these are long-term moves, monthly chart, weekly chart. On the daily chart, we see here that it almost touched this demand zone from the weekly chart, and formed this sort of a pin bar and a potential, again, potential bullish divergence on stochastic. And we'll see this divergence in other pairs as well against the dollar. In this case, it may continue or start moving higher after coming back to this demand zone. So pay attention. I would say I would prefer, if I were looking to go long here, I would prefer seeing the euro dollar going a little bit higher, crossing at least the first moving average, the 9 moving average, crossing above it, and then coming back down, retesting it, and while the moving average starts going higher as a dynamic support, and then continue up. Another option, if you're looking to go long, is to wait for this area more or less to be broken, sort of like a double bottom, and then going up. Let me just annotate it. So go up, retest, and continue up, okay, while the moving average also gives you support. So this is for the euro dollar, at least for the middle term, more or less. You can see that on the 4-hour chart, we already have a beginning of a potential reversal. Okay, as long as these moving averages hold, as long as this area holds here, then we may see the euro dollar continuing higher. And again, like I said, for those who have patience, best way, if you're swingers, if you're long-term traders, is to see the euro dollar finding or reversing, making reversal above this resistance line, finding support here and continuing higher. This is for the euro dollar overall. And again, today is a quiet day because of the Independence Day. I guess the markets will start moving or having more volatility from tomorrow. But pay attention to these intraday demand zones and the daily demand zones for demand or support. Same for the pound dollar. Pound dollar also forming bullish divergence, as you can see. And on the weekly chart, we can see the demand zone, well, sort of a small demand zone on the weekly chart, coming from this area again of March, well, April. For those of you who attended my webinar 2 weeks ago, we spoke about this huge monthly or weekly supply zone. It hasn't reached it yet, and I think it will try to reach it. But until then, we first need to see that the pound dollar doesn't confirm the or confirm the double top here, double top pattern, double top formation. For the pattern to be completed or confirmed, we need to see a lower low. However, pay attention to this zone here, or this area around here. We may have, again, the bottom of the demand zone. There's also support here, resistance turning to support. And you have the 50 EMA, 50 moving average, 50-day moving average, which may also serve as support. So pay attention if the pair goes down and maybe just making a false breakout, touching this demand zone on the or the moving average on the weekly chart, and then coming back up, forming a pin bar, in which case it might just be a false or negative breakout, false breakout before continuing higher. So the direction is still sort of sideways, moving sideways, but the overall trend is still higher. Okay, and as long as the double top is not confirmed, we're still in a bullish trend. The moving averages are also already bullish, serving as dynamic support. As you can see here on the monthly chart, the 9 EMA is giving dynamic support on the monthly chart. And again, I think potentially that the first target for the pound dollar is to test this monthly demand zone, and also look at this huge pattern here. Okay, we may have a double bottom here, and if this zone is broken higher, we may see that a move much higher against the dollar in the coming months. But of course, if the pound breaks lower, okay, you can see here there's also supply here below this big supply, monthly supply zone. There's another supply here. If it breaks lower, then we may see the pound going much lower. But let's wait and see first to which direction the pound is taking. Is it a double top, or is it just a temporary retest of this demand zone? I will review the pound, the euro kiwi a little bit later. Let's first finish with the major pairs. Dollar yen, I spoke about it again a couple of weeks ago. I said it's in an uptrend. I spoke about all the yen pairs in general, the yen crosses, but the dollar yen is moving higher, and look how it broke above this supply zone, or on the weekly chart and on the daily chart as well. It found resistance here, or supply. It gave this beautiful pin bar on the moving averages that serve as dynamic support on the daily chart, went up, compressed down again, sort of like a flag. See, it's going up, compressing, or going sort of sideways in a small flag, and then again a move up, breaking above this demand zone, above this supply zone, which now may turn to demand, or simply resistance, sort of resistance around this area, turning to support. Okay, so this is a nice retest of resistance or supply from above, turning to support or demand. Well, it's not exactly turning into demand, because the demand has to come from the base of the move. But again, it's sort of a reversal here. The target for the dollar yen, should it continue higher, is to this supply zone above. You can see this first supply zone on the monthly chart, where this big engulfing candle is. Okay, this is where the closest supply zone initiated. Above it, another supply zone. So I think the dollar yen may very well continue higher to this supply zone, and just pay attention to these resistance lines above, just below the supply zone. Again, I think the supply zone is really the initial target, around 160, 170 pips above. And the next major is the dollar Swiss. The dollar Swiss, we have here also the dollar Swiss. We spoke about it back then. Is coming from a demand zone, from this weekly demand zone. You can see where the demand zone initiated with a very strong move up, coming back down, accumulation. Okay, the price came down rapidly and then started slowing down and compressing, moving sort of down but sideways into the demand zone. Okay, this is called compression. The price is not coming directly or rapidly or swiftly into the demand zone. It's kind of moving sideways, sort of accumulation. And then we have the first sort of engulfing here as a confirmation or price action, a retest coming above the moving average and then sitting on the moving average and then a strong move up. Brian, when you say losing momentum and bearish divergence on the daily chart, are you referring to, I guess you're referring to the dollar yen. So yeah, the momentum here is not very strong at the moment, and the last week's candle is not very compelling as well. I agree. On the other hand, yes, there is basically a potential. Well, on the daily chart, the I don't know if it's a small divergence, but it's not a very strong divergence. Not like, for example, the divergence you can see, you know, a very clear divergence between two long or two distant troughs or two distant peaks. So the divergence here is not classic. Here, for example, again, you can see the same thing here. There's a light divergence here, but it's not a very strong one. Okay, and as long as the price is not moving, not breaking the low and not moving rapidly down, it's not a very strong divergence. Okay, it's sort of like a compression or a sideways move. I agree that the bullish, the engulfing candle here shows some weakness. And if the dollar yen goes back below this area, if it goes back below, closes below this area, then the momentum up is completely gone. And then I agree that it's a bearish signal. But as long as it's holding above these areas, previous high, and above this local demand zone on the daily chart, then the trend is still bullish. So same here with the dollar Swiss in this case. Here there's more weakness. You can see this bearish engulfing candle, and you can see that even though it broke above the previous high, it broke down below. Okay, while with the dollar yen, it didn't do it. Okay, so here with the dollar Swiss, the Swiss looks stronger than the yen, which will make us wonder about the Swiss yen. But you can see that there was a false breakout above this area, this previous high, yet this, the candle, the very strong candle of the dollar Swiss from a few weeks ago still suggests that more uptrend could come as long as the moving averages are supporting, and then we can still see the price moving higher. But again, we need to see a firm close of the weekly chart above this this zone, okay, or at least a compelling close of the daily chart above the zone. For now, you can see how the daily moving average is supporting the 9 EMA is giving dynamic support here. So as long as the price holds above this support, and if it closes above this zone, the trend may continue going higher. And in this case, we definitely need to pay attention to the supply zone here. Okay, I would say that once this this area around 0.92, 0.9250, if the price goes above it, then the next target is around 0.94, which is around 150 pips above. Okay, this is definitely the next target should this zone be breached higher. Dollar CAD, we spoke about it, a huge monthly demand zone here, huge monthly demand zone. You can see this consolidation or this accumulation, beautiful accumulation at the bottom of the demand zone, almost at the bottom, just below the lower half of the demand zone. Beautiful accumulation, and then you can see how the moving averages, how the price broke above the moving averages, came down, found support, and continued higher. By the way, I spoke about this pattern. I keep mentioning the moving averages and how they serve as dynamic support or resistance. You can go to our YouTube channel and watch the webinar I gave a few weeks ago about, I think it's called Patience Pays or something like that, exactly about how these patterns give you excellent entry points where you have supplier demand and you have these moving averages exactly with this pattern, how the price breaks above the moving average, retests it, the moving average serves as support or the other way around as resistance, and then the price keeps moving in the direction of the moving averages. This is a classic reversal pattern, and you have this confirmation candle here breaking above both moving averages inside the demand zone after accumulation or compression inside the zone. Really classic pattern. So go watch the YouTube video. I think again it's called Patience Pays. And these moving averages are all exponential moving averages, 9, 21, and 50. You can also use 9, 20, and 50, or 10, 20, and 50, but more or less these moving averages. Some people also add the 100 moving average, which is also a great moving average, and of course 200. I prefer using these three. These are sufficient for me. I don't want to put too much stuff on my chart anyways. So again, a nice move up, nice support from the moving average on the weekly chart now, from the 9 moving average on the weekly chart. Let's see now if the 9 EMA crosses above the 21 EMA and the price sits or finds support on top of them, then it's definitely bullish. But again, overall, remember, overall, at least on the weekly and obviously the monthly chart, the trend of the dollar CAD is still negative, is still bearish, as long as we don't have or don't see higher highs. Okay, we still have lower lows, we don't have higher highs yet, so the trend is still bearish. And Enrique Luis is saying something about the same pattern in January. Yes, well, yeah, it's very similar. However, you can see that, I mean, it's similar in the so that in a way that it crossed above the moving averages, tested them, but it broke down again. And pay attention to the fact that the 9 EMA hasn't crossed above the 50 EMA. Here, eventually, and eventually it did cross, but of course you couldn't tell that in advance. but yeah, I mean, if you come and take, and this is what the method mentions, if you come and wait for the price to test the moving average and then enter while placing your stop loss below the entry point, let's say you enter here, okay, or here, and you place the stop loss below the entry point. The stop loss here is about 70 pips, okay. Here, if you wait, you have about 78 pips. If you enter here next to the moving average, you have about 30 something pips. Here it didn't work. The trend continued lower, even though we had some sort of like compression, and we had even a divergence, which is also mentioned in the method, but it didn't work. However, um, however, the price here is still above the demand zone. It hasn't reached the demand zone, okay? And in the method, I'm mentioning that supply and demand are first and foremost the most important thing. So this is not as strong as this one, or even this one. And by the way, this is also a nice signal. We have here this engulfing candle on top of the move of the demand zone. We have engulfing. This is also a potential entry, but eventually it didn't work. And obviously, if all signals worked, the market wouldn't be wouldn't be what it is. I mean, if everything was known and if there was a system that worked 100% of the times, everyone would use it, and the market just, either change or cease to exist. So obviously, not every signal works, but here, that's why we use stop loss. Okay, we use a stop loss because we don't know, and it's all a statistical potential. But if you took, let's say, the signal here, and you, let's say, put a stop loss here 70 pips up below, and took even this move of 280 pips, okay, you have a 4-to-1 ratio, which is amazing. Okay, so use stop loss on every one of your trades, because again, technical analysis is only statistical, and you never know which trade will work and which not. So think on a series of trades basis, not every trade is the one definite trade. I will go over CAD yen and Euro Kiwi soon. Aussie dollar is interesting because it looks like there's there's a distribution just below this demand, this supply zone. Look, by the way, at this, how oversold, how overbought the Aussie dollar is, and there is some sort of like a hidden divergence. Okay, it formed lower highs, but the stochastic, the oscillator, formed a higher high coming from the overbought zone and going lower, crossing below. We have here some rejection candles and a confirmation candle, sort of like price action coming from the supply zone. And although we have some sort of a potential demand zone around here, potential support, you can see that there is a small breakout here. I'm not sure if it's a false breakout or not, or if it's a signal for the zone to be like consumed or invalidated. A cup and a handle pattern. If you're referring to the monthly chart, not sure if it's a cup and a handle yet. I mean, the handle, it should be a little bit more rounded, and the handle should look more like a flag. It doesn't look like it's so much yet, but again, it doesn't have to look exactly like a cup and a handle. for me, it feels a little bit more bullish at the moment, and sorry, bearish at the moment. And you can see that it formed lower lows here. It still has some sort of dynamic support from the 50 moving average on the weekly chart. Still some support in this demand zone, and there is also this support line. Okay, it was resistance around here. We have support, resistance, resistance, and if the price goes down, it could find support around here. So just be careful. But again, coming from supply zone on the monthly chart, several rejection candles, a strong candle down, it doesn't look good for the Aussie dollar. And as long as this supply zone holds, I would be careful with long positions in the long term. Short term, we definitely may see the Aussie dollar testing previous highs, maybe trying to go even a little bit higher. Maybe testing this high, or testing or maybe testing this area around here, more or less. Yeah, more or less. So just be careful of these zones here, because the Aussie dollar is showing weakness. Potential bullish divergence, but not a very strong one. All right, so this is for the Aussie dollar, just like the pound dollar and the euro dollar. Maybe a temporary reversal, maybe even a long-term reversal. Next is the Kiwi dollar, which looks a little bit stronger than the Aussie dollar. It didn't form a lower low on the daily chart. However, it did also break a little bit below this demand zone. So again, it might continue lower. And on the monthly chart, also coming from supply, forming two bearish engulfing candles, especially the last one. Not a very good signal for the Kiwi dollar. On the other hand, as long as it's holding above this, or inside this demand zone, above this previous low, then it could try to go higher. But I still feel there is weakness here, and the fact that it managed to break a little bit below previous lows here may be some sort of a signal that there is weakness. So again, closing below this zone here, and the Kiwi dollar will go lower. How much lower? Probably at least to this previous resistance. Okay, one thing now before, these are the majors. I'll go over some of the crosses, like Euro Kiwi and the CAD Yen and others as well. Pay attention to the Euro Pound. I spoke about it a few weeks ago. The Euro Pound is compressing into this demand zone. Okay, look at this bullish engulfing candle. What a big candle, which initiated this demand zone. And the price is literally compressing down into this demand zone. It touched it twice and bounced a little bit. So it could find support here, in which case either the euro dollar goes much higher than the pound dollar, or I mean against the dollar. Okay, either the euro dollar starts moving much more strongly, or with more confidence against the dollar, or the pound dollar goes lower or shows more weakness against the dollar than the euro dollar. So euro pound is interesting if this zone is consumed, which is definitely possible, because we're not, I don't see a conviction or a confirmation candle, a price action candle from this zone yet. I mean, we see these two rejections, but nothing too strong. I don't see, for example, a morning star pattern with a confirmation candle or an engulfing candle coming out of this zone. So as long as this zone, this area doesn't form a confirmation or a price action pattern, it could be consumed, and the euro pound may go down and retest the previous demand zone. Okay, so just those of you who are trading here, just be careful. There's no conviction yet, no confirmation to either direction. So if we're talking about the euro pound, let's also review the euro kiwi that I think Enrique asked for. Let's just open it. So euro kiwi, let's start from the monthly chart. Okay. So on the monthly chart, just a quick, quickly drawing some supply and demand zones here, the most notable ones. One moment. This one, and yeah, I would say something like around this area, around, yeah, something like that. Of course, well, we have, well, the euro kiwi at the moment doesn't show, well, looks like pretty much still sideways on the monthly and on the weekly chart. I don't know which direction you're looking for, because to me it looks like a complete sideways with no real conviction. The moving averages, some are going up, some are going down. Here they're moving sideways on the daily chart. If you're looking for shorter term, I would say that, well, again, there's a very small demand zone here. But you know, when I see something like this, I just don't trade it unless you're a scalper and you're looking for intraday trades, in which case I would, you know, wait for the price. Let's annotate something here. You know, if the moving averages continue higher, you know, or cross, and the price finds support, I would try to go long. I would pay attention to the 50 moving average. But the direction, I mean, there is no clear direction either way. I mean, otherwise, if the euro kiwi goes lower, okay, goes, yeah, listen, it's so messy. So one second. Yeah. If, yeah, it's really hard to tell. I mean, I don't see any clear direction in either way. So when I don't see a clear trend, I just don't trade it. Basically, yeah, sorry. I mean, intraday chart, the trend is still lower. If you're looking for an entry, I would just maybe I would look for a break of this either a retest of this trend line to go long, or just breaking below this trend line, retesting and just taking a short position here. But again, the trend is so unclear that you know, I just wouldn't trade it. There are so many other pairs that have a clear trend. Let's have a look at the CAD yen. Let me just, oh, sorry, I stopped the share instead of the annotation. Let me just clear this. Yeah, so CAD yen, for example, I would, okay, CAD yen to me, let me just clear these. There was a small position here. Where is it? One moment. Sorry. Okay. CAD yen is still in a bullish trend. Okay. It went down, tested this previous resistance, found support, made another pin bar after trying to go lower, and I would look, preferably, I mean, I would try to look for a long position above, if it goes higher, above this area. Let me just, yeah. If it breaks above this area, more or less, I would try to go long. You have this, this demand zone around here. So looking at the CAD yen, you know, I would wait a little bit to see if it starts going higher. Breaking above this area, I would go long. Of course, if it goes lower, if it goes below this demand zone, I would go short all the way to this zone. But again, wait for the trend. At the moment, H4, H1, you see here that it may retest, you know, after, you know, a double bottom, going up, going lower, retesting this area, it may start going higher. So if you're trading H1, H4, just wait for the price to start moving higher. And if you have more patience, it's not too much, you know, it's just about 30, 40 pips. Wait for this supply to be consumed, to be broken, and then you can go long with more conviction. It also gives you confirmation that this, previous resistance, which is now support, is holding, okay, potentially. So wait a little bit, wait for this supply, and then you can, I think, go long at least a few dozens of pips to this resistance, yeah, around 80 pips or so. It will give you a better entry. Let me again annotate it here. It will give you a better entry. If you, let's say the price goes here and retests, and you enter around here somewhere, you place the stop loss here, and you have all the way up here. So the risk reward ratio is definitely in your favor. Okay, this of course is in case the CAD yen is moving higher. Let me just clear this. Okay. Other than that, let's have a look at other pairs like the euro yen. So euro yen, again, very close to the monthly or weekly supply zone. It found resistance, okay, at the previous resistance area that was almost tested previously, but you can see this resistance here. This supply zone hasn't been tested yet. It could try to retest it. This is where we need to see the price holding. Okay, you have here temporary or intermediate resistance, retest, and now we need to see the price holding above it. You're welcome, AJ. If the price breaks below this area, then we can definitely see the price going all the way much lower. Okay, around 300, 330 pips. You can see here this previous resistance. Okay, support, support, resistance. Let me just make sure you can see the mouse. Okay, so support around here, resistance, 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 and breaking above. And now, again, this is the first support area, and this is the second one. If this support is broken, definitely you can see the price retesting either the 50 EMA or even this area around here, which gives you, again, a potentially very nice trade down of around 300 pips. And of course, if you enter around this area, this zone, the risk isn't too much, isn't too high. Okay, let's say around, yeah, like 60, 70 pips tops, even lower, less than that. This is the weekly, yeah. If we go to the daily and the 4-hour chart, you can try to enter already here. Okay, below this zone. If this zone is broken, you can go down with an initial target of around 65, 70 pips. This is the initial target. If you see price action around here, then you can go long. Okay, if you see some sort of price action, I don't know, an engulfing or a dodgy morning star, whatever, then you can go long with the first target around here. Okay, again, good risk reward ratio in your favor. This is euro yen, pound yen. Looks a little bit stronger, but again, similar pattern to the euro yen. Okay, even though it's a little bit stronger, you can see this previous resistance. Let me draw this. Okay, previous resistance retested. Yeah, it broke down and up again, but it still may serve as resistance, as a support here. And if we look at, of course, on the higher time frame, we're just below the monthly or weekly supply zone. However, there hasn't been yet, at least yet, any price action to confirm this price zone like we see here. Okay, we had price action here, a very nice price action. Let me just pick another color. Okay, around here, there's been a nice price action. Okay, this engulfing candle, but and after that, it moved all the way back to this demand zone. Now we don't see any price action, at least not yet. On the contrary, we see that the buyers pushed into the zone with this engulfing candle. So for now, the trend is still strong, it's still bullish, with no signs of weakness, at least not on the monthly or the weekly chart. So if you're looking to go long, the daily may start showing signs of trend or resuming the trend higher. You can see on the 4-hour chart the price in between the moving averages if it closes above it, and especially if the price, if the moving averages reverse, so that the short moving average crosses above the 9 EMA, the 20 EMA, move above the 50 EMA, and the price finds support on the moving averages, and this is definitely a good sign for you to go in and look for long trades. And on the 1-hour chart, the again, potentially with the moving averages, you can start looking for the price to go up. Just pay attention to this small, but still there, the small supply zone. It's not a strong one. It's just an hourly one. It's not even a like a major or a supply zone from which a big move initiated, but still just pay attention to it. Just don't enter right below it and then get caught in panic or whatever. So just pay attention to it. But if you go long, the target could definitely be higher back to this demand zone or to the supply zone, or even you can see this trend line, beautiful trend line. So you have the target. Let's say you enter somewhere around here. Okay, again, pay attention to the zone, but you have something like like almost 100 pips. Okay, like 100 pips around here. And if you enter with the stop loss below the moving average that serves as dynamic support, then you shouldn't have a big stop loss. Okay, with a nice target. If anyone has other currency pairs that you would like to ask about, feel free to do so. Let's have a look. The Euro CAD. Euro CAD. Wait, where is it? Yeah. Euro CAD, basically, we have, well, sort of this demand zone around here. Okay, you can see that the price is compressing into this demand zone. I mean, the real demand zone is around here. This is the base of the demand zone. Okay, you can see that the real like the buyers are waiting here. I mean, if the price goes all the way down here, this is where you should be waiting for the Euro CAD to enter. Huge move up. This is where you should be looking for an entry if the price goes all the way down here. If you see price action sort of like an engulfing around here, then you may start looking for an entry point to go higher. As for Euro Swiss, where is it? Oh, sorry, it has to, one moment. The chart is refreshing. Let's look at the daily chart in the meantime. Euro Swiss looks like a nice uptrend. Okay, this whole area here that, okay, we had supply tested, and then breached, and now retested. You can see how it compressed into this area. And I would wait for the Euro Swiss. Yeah, I mean, if you're looking to go long, then this, I would wait maybe for an entry point around, look for an entry point maybe around here, sorry, around here, more or less. Okay, you can see here previous resistance, and then retesting as support. So this this level here could be a nice support level to enter to go long. Obviously, if it goes lower below this zone, then you have all the way to go lower. But again, look at the way it looks like a price reversal. As I've mentioned previously, we have a trend down. Sorry that the chart is moving because it's refreshing, but we have a trend down, and now the price moved above the moving averages and came down, retesting them. Okay, you can see how there is sort of a flag here. Okay, a pole and a flag compressing down. Okay, and potentially retesting. If this week, okay, you have a bullish candle, an engulfing bullish candle here, and if we close around just above this previous candle, preferably above the week, the candle wick, but even above the open of the previous week, if we close above it, then we definitely may see the Euro Swiss going higher. And as I mentioned on my webinar, the Patience Pays webinar that you can watch on YouTube, we have a classic bearish divergence here. Sorry, bullish divergence, hidden bullish divergence. You can see that we have higher highs, sorry, higher lows. And the last low has formed a much lower low in the oscillator than the previous lows. Okay, we have higher lows in the price, lower lows in the oscillator. This is hidden bullish divergence, which is bullish. Okay, it's a bullish sign. It usually happens when we have a trend, retest of previous resistance or support, or supplier demand. In this case, an uptrend, the price is going down to retest a previous level, and as it's retesting it, it's forming a hidden divergence. It's forming a lower low in the oscillator, and this is bullish. Okay, so we have previous resistance breached, retested, moving averages, hidden divergence. This is definitely bullish. Okay, of course, if the price breaks this trend line and goes below the trend line and the previous low, then all the scenario, everything is then negated. But again, if you enter around here and you put your stop loss just below a 90 to 100 pip stop loss, if your trade position, if your position size is reasonable and you're not risking too much of your account balance, let's say up to 1%, then you can take this risk. Or obviously, if you go and if you take a lower time frame, then you can risk much lower. Let's say it's retesting this line, you can place the stop loss around 40 pips below. I don't know why it's flashing, because probably the chart is still refreshing. Just look for a lower time frame to enter, and then you can set your stop loss at a much reasonable place. For example, what happened? Okay, let's say the price goes higher, the moving averages are crossing, then you can set your stop loss below this low or below the moving averages, and then you're risking much less than the potential reward. And the potential reward could be all the way up here to this supply zone. Okay, and last but not least, Aussie CAD. Aussie CAD. One sec. Okay. Okay, Aussie CAD. Let's just wait for the chart to. Okay, so Aussie CAD, we have another classic. You're welcome, Audric. Another classic demand zone here. Okay, you can see how the demand zone formed around here. Okay, this engulfing candle. Let me just, okay. Okay, this is where the demand zone formed. You can see that it was retested and confirmed with this with another bullish candle. Beautiful, beautiful setup. Okay, this is the classic setup. Demand zone initiated with an engulfing candle, retested, breakout from the moving averages, testing, and then sitting on the moving averages, and an uptrend is formed. Classic. Now, if we're looking at the Aussie CAD, so you can see that it's still within the demand zone, but it's the demand zone is almost consumed. Okay, it's not still not showing any signs of strength for now, at least on the weekly chart. On the daily chart, it may start going higher. But again, if you want to have confirmation for the uptrend, you need to wait for more or less this area to be taken, for the price to close above this area, more or less, and then the uptrend may resume. And then on the weekly chart also, you may have some sort of a confirmation candle, like a bullish engulfing candle. Okay, we may have on the weekly chart a potential bullish divergence, but again, if the price continues lower, then this divergence will disappear. And of course, if the EuroCAD closes below this demand zone, then the road is clear for a drop much lower initially to this area. Okay, you have here support, support, broken, resistance, 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 and then breached higher. So if it's broken, it will go like 120 pips, 130 pips, all the way to this area. So the trend is bearish. Okay, the trend is not bullish yet. The trend is still bearish, even on the daily chart. But as I've mentioned, if the price starts going higher and breaches above this zone, if the moving averages reverse, if you see higher highs, then you may have a confirmation for the uptrend. Otherwise, closing below this area, below this previous low, and you have a confirmation to go down to previous support. Okay, somewhere around, yeah, around here, all this area around here. All right, guys. So that's it for today. I hope I answered your questions and gave you some good ideas for potential setups. Again, watch the trends, watch the supply and demand zones, watch the higher time frames, but more than everything, manage your risk. Okay, the most important thing is risk management, because again, it's all a matter of possibilities, of statistics, of you know, of probabilities. So don't put too much emphasis on any one of your trades. If it goes well, great. If it doesn't go well, just close it and move on to the next trade. Good luck. Happy Independence Day for all of you Americans, and have a happy trading week. Thank you very much. Take care. Bye-bye.